Well, home prices continue to cool and inventory remains very low here in San Diego. I'm Woody Henderson, and this is the December 2022 San Diego housing market update. Let's start with taking a look at key metrics here in San Diego. In November of 2022, the median home price was $753,750. That's down 0.2% from the same time last year. Market time is up to 34 days, up by 47.8%. The number of new listings is down by 17%. The months of supply has more than doubled to 1.6 months of supply, and the number of sales is down pretty dramatically to 1,750, or down 44% from the same time last year. Definitely a cooler market than what we saw in November of last year, as things were still pretty heated up and heating up in November of 2021. This year, we've got cooling prices and supply continues to remain constrained. Take a look at the median sale price over time. We can see the run up since the pandemic. And in November of 2021, the median price was 755. Today, we're at 753, 750. And you can also see the peak in May of 2022 at 855,000. Important to note that prices have softened in 5 of the last 6 months here in San Diego for the median home price. Take a look at inventory. We've been consistently under 5,000 active listings on the market since the mid 2020, and that is a low inventory situation for sure. Let's take a look at what's happening in mortgage rates and the underlying fundamentals of mortgage interest rates. So 30-year mortgage rates move very closely in unison with the 10-year Treasury yield. And this slide shows where the 10-year Treasury yield has been over time. And the average spread is 1.7 points. This shows the 10-year Treasury yield over the past year. You can see how it's risen up to 3.5%. And then let's take a little bit closer look at this and the spreads that we're seeing. So between 2000 and 2021, the average Treasury yield was 3.49 and the average mortgage rate was 5.28%. Where we are today, the Treasury yield is 3.5%, but that spread is 2.99, which is pretty dramatically above that 1.79 that we'd expect traditionally. And we're experiencing mortgage interest rates in the mid sixes at this particular point in time. What would it be today if we were in a normal spread? We can see that at that 3.5% with 1.79%, we'd be in the mid fives, 5.49%. And why do you think that this condition persists? Well, some believe that because the investors that are investing in these mortgage-backed securities believe that interest rates are going to go down, so they're charging a premium now while they're able to do so. Lawrence Yun, the chief economist for the National Association of Realtors, expect us to return to a normal spread to bring the rate down to about 6% on 30-year mortgage rates. So what do we expect in the 2023 housing market? This is from the chairman of the Federal Reserve. He says we need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. And that's sort of the driver behind the recent rate increases by the Feds. Here are mortgage rate projections by the Big Four. We can see that we're expecting rates to be in the mid sixes at the beginning of 2023. However, notice that they tend to go down towards 6% by the end of the year. So the forecast is that rates will start in the mid sixes and should come down to the low sixes by the end of 2023. The upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. And that's true. Mortgage rates could pull back meaningfully next year if inflation pressures ease. And I believe that to be as true as well. So let's take a look at total home sales and what's happened. In 2021, There were more than 6.8 million homes sold in 2022, forecasting about 5.8 million. And then let's take a look at what we expect in 2023, the forecasts from the expert, on average looking at 5.1 million. So we will likely see fewer homes being sold in 2023 relative to both 2022 and relative to 2021. Where do we think home prices will be? Well, here are 7 of the expert organizations, and 4 of them believe that home prices will improve and go up, whereas 3 of those entities believe that home prices will actually go down. On average, the forecast is just slightly positive at 0.4% increase in 2023. So the housing market, once adjusted to the new normal of higher mortgage rates, will benefit from continued strong demographic-driven demand, primarily the uh, millennials coming into the market relative to an overall long-run shortage of supply. And this is from Mark Fleming, the chief economist at First American. I also wanted to talk just briefly about with where prices have gone over the past several years, there's a lot of equity in the marketplace. And you can see relative, this is 2021 in the orange line here, $9.9 trillion. And then where we are in 2022, up 400 million above where we were last year. There's a lot of equity out there. And one of the things that we're doing for our best clients and for anybody who's watching this particular video is doing a free home equity review, help you understand the current value, market value of your home, what you would have after you paid off a mortgage if you've got one. And then we're also adding in a rental analysis because we've seen the demand for rentals just exceed or go so crazy in the past several months. Anyway, thank you so much for taking the time for allowing me to share with you. I want to be your resource for everything real estate related. If there's anything I can do for you, please let me know. I'm here to be of service.